Okay, so hi everyone. Welcome to yet another podcast, Quant Podcast. Basically, we have Manupriya Gupta with us. She's a bachelor's in computer science and engineering from IIT Delhi. She had a rank of 220 in JEE Advanced 2018. She went on to pursue a master's in computational finance from Carnegie Mellon University, CMU. So, Manupriya, how are you?
I'm good, doing great today. Yep.
And so, after the introduction, I think the questions everyone will be having is that what was the motivation in your mind to pursue computers of a quantitative finance masters? Right after your bachelor's, were you interested in quant directly from your undergraduate degree?
Um, okay, so there are two things. First is if you're interested in something, and second is if you're passionate about something. So,
Right,
yes,
right,
I was interested in quant. I learned a bit about it, when I was in second year, third year, and I found the
of your
space to be really
bachelor's.
exciting. Yeah, of my
Okay,
bachelor's. Found the space to be really exciting. That's where, mathematics, computer science, finance, everything comes together. Um,
right,
but the passion for quant finance, I think it's difficult to have that extreme passion when you're an undergrad, because obviously the kind of internships or research you do, it's fairly different from what actually happens in the industry.
right,
So for quant finance degrees, there are two kinds of people who come for these degrees. First are definitely the ones who are interested, so they come mostly for the learning aspect. And the second set of people are ones who've already worked as quants for some years, and they're passionate about it, want to take the next step in their careers, want a little bit um, assistance in like professional growth and development. Those are the passion
right.
driven candidates who come to like quant finance degrees.
Okay. So, for example, you mentioned that people, who already are quant, do come for, a master's in computational finance. If I see the syllabus of any, master's in computational finance, for example, it includes starting from linear algebra, mathematics 1 and mathematics 2 of our IIT times, basically, which includes single and multivariate calculus, right? A complex system, stochastic calculus as well, because most of us have this course in, lateral part or electives.
Yes.
Apart from that, financial engineering we also have in our engineering curriculum or bachelor's curriculum. Machine learning we do have. So what makes it different at master's level? Like, is it the depth or is it the research or project culture?
Well, I think now a lot of institutes have started offering, financial engineering courses to undergrads. I didn't do
Right,
any of the finance or financial engineering courses when I was an undergrad.
right,
So for me, the exciting part of the syllabus were the finance courses on fixed income, equities, risk management, a lot of courses which teach you about presentation, just the way you speak, professional development, case studies, and all.
okay,
So, look, the thing to understand here is that people from different backgrounds come to pursue MFE or quant finance degrees. Okay. So, the curriculum is such that it includes aspects of mathematics, machine learning, computer science, finance, business, everything.
right,
For people who are going from engineering into quant finance, a lot of courses would be repetitive, like the ones you mentioned, linear algebra, mathematics, machine learning,
right.
programming courses. But also, there are lots of people coming from economics background, finance, business management backgrounds. So for them, these courses are important. So any
Exactly.
quant finance program would have a mix of courses, some of which will be repetitive, and the others would be, more for you to learn the first time.
Right. So let us say, let's go, I think, in some depth. For example, let us discuss volatility models. So, for example, there is a local volatility model, there is uh, a stochastic volatility model, then SVI parameterization is there. So, do we study all these things in depth? Do we implement them during masters?
Yes, you do. I mean, some courses would require like one or two homeworks or projects which actually go into depth of models. But generally the way courses are taught is that you're given a general idea of what stochastic calculus is, how do you model a process, how do you solve differential equations, stuff like that.
Right.
And in the final in the final semester there are some specialization courses if you
Okay.
really want to focus on advanced derivative models. That would include volatility modeling, in which you will use models such as the Heston model, get get to play around with implied volatility, the curves,
Right.
everything. So yeah, it's part of the curriculum, but again, it's not as detailed as it would be in the industry because it's not feasible to teach that at even a grad level, because those are
Right.
very, very specific use cases. And it's best if a person goes to the industry and, then delves into
Implement them.
depth of these complicated models.
Right. Manupriya, most of the questions that we get from folks who are, interested in quantitative finance, can they get a chance of doing an internship under the professors of these, universities, for example, which offers a master's in financial engineering or, for example, computational finance? Do they offer internship or project to students?
I haven't heard of internships, but there are definitely projects.
Right.
Now, look, no university in the world has a separate quant finance department. Okay.
Right. Right.
So, professors from different departments come and teach courses. So, professors
Right.
from business school are going to come and teach finance courses. People from School of
Mathematics.
Mathematics are going to come teach fixed income derivatives, calculus, all these kind of things. So it's a good idea to reach out to the professors, but I mean, it would be, um, I don't know if it's like, I haven't heard of any specific professor offering quantitative finance projects, okay, like officially defined, properly defined quantitative finance projects, because professors have their own specializations.
Exactly.
It's
Exactly.
up to the because as students of the program you get to study everything, so you learn everything. But there could be professors who work in different departments, so they may have different projects, different people working on different projects. So it's a good, I think the best answer to this is, you should just like reach out to the professors, try to find out the work they are doing, try to find a
Exactly.
good application of the work they are doing, and then like learn about some aspects of quant finance from that.
Yes, for example, students may try, understanding what kind of problem statement are they working on, and it can be used in quant finance in
Yep.
general, for example.
Right.
So, yeah, and one more related question related to masters is, for example, there is someone who don't have the opportunity to, pursue masters in foreign university or something, or they don't have that kind of exposure. So, what do you think can they do? For example, they can refer to books or any resources that you may suggest to them to study all these things and the kind of exposure that they are missing. Do you have any suggestion for them?
Okay, I think if we take a step back from that, I don't think a quant finance degree is necessary at all to work as a quant in the industry. Okay.
Exactly right.
Most of my colleagues are from, you know, non quant finance backgrounds. A lot of them are from computer science background. They have done PhD in applied math, physics. So it's a mix. So you don't
Right.
really need a degree to teach you what to do, because at the end of the day, nothing is rocket science. You can always learn things at work. I
Right.
think the way to get started is to have strong fundamentals, fundamentals in programming and fundamentals in mathematics. Finance is, it's just a layer on top of everything else. So you can
Right.
learn it pretty quickly, right? So, but if you're still interested, I think JC Hull has authored a book called
Introduction
Derivatives.
to
Yeah, I think
derivatives
it's,
and futures.
yeah, right. That one, Introduction to Derivatives, Option Pricing, and all. So
Yeah,
that is one book which explains things in the simplest language. So that is
definitely.
one thing you can look into if you're really interested, in learning about this. But I think if you're looking for opportunities, In quant, you just need a solid background of mathematics and computer science.
Right.
That's really it.
And like just to add, I think for engineering undergrads who are there, just the maths courses that you have already studied, for example, linear algebra and all, finite difference method, numerical method and all.
Yes,
So that
probability, statistics, bit of that as well.
exactly. Now coming on to your current profession. So I think you have a background in. So you have worked both in buy side and sell side as well. So let's first talk about the buy side experience. So do you think all these maths, for example, stochastic calculus, probability, statistic, and all are required in quantitative trading and research particularly?
Yes, of course. I mean, like, it's you do require um, a good understanding of statistics, programming, like I mentioned before. I think on the buy side, the roles are slightly more differentiated: quant development roles and quant research roles. So, quant research roles, they would require you to know statistics in depth,
That's
even
right.
if you're not a great programmer, whereas quant development roles would require you to be a great engineer. You should know how to build end-to-end systems. Quantitative trading would require skills in mental math, um, again, quick thinking, and just like basic mathematics. So
Exactly.
roles are a little more diluted when you come on the sell side, because on the sell side it's there are traders and then there are quant strategists. So every strategist is a hybrid between a quant researcher and a developer. So you need to know everything basically. So
Right.
yeah, there are different kinds of roles out in the industry. But yeah, coming to buy side, definitely if you're going to quant research, then learning about machine learning, alpha research, statistics is a must. Yep.
Exactly. And when we talk about quant strategist, what kind of role it is, and so what is expected from a quant strategist? For example, I think this kind of role is there at Goldman Sachs, right?
Okay, so many years ago, there was nothing known as a quant strategist. Okay,
Right, exactly. That's right.
Goldman is the first company which came up with this role titled quant strategist. There used to be, both on the buy side as well on the sell side, there used to be quant traders, researchers, and developers, right?
Right,
Now, typically in a buy side setup, the thing is that quant researchers, they just purely do research work. They make models, they make predictions, and traders are the ones who are involved in the actual trading, in the P&L, right?
right, right.
So, but people working at Goldman, they were somewhere between quant researchers and traders, right? So
Okay,
that's why Goldman came up with the terminology of quant strategist, and eventually other banks also started using it,
it's
right?
quite interesting.
So, quant strategist is basically a person who is working on strategies, trading strategies, and working very closely with the desk. Because in
Right,
market making, you don't just need good traders, you need a good amount of scalable, reliable infrastructure to be able to support that volume, right?
right,
It's not fundamental equities trading, just long short portfolios. It's volumes, insane amount of securities being traded, right? So that's the reason the role quant strategist came up, because somebody has to work, both as a researcher and understand trading. So quant strategist is a role which allows you to do research and development, and at the same time think exactly like a trader does, because you work closely with them. So
so it's
that's
kind of a
what the role
hybrid
is.
combination of all these roles.
Yeah, you're
That's right.
not literally a trader. You're not going to trade on your own, but you will have to
Right,
think like a trader, make strategies like a trader. So
right,
that's what it is. And obviously, like, there are different kinds of quant strategists as well. Out of all quant strategists I know, like, people specialize in something over time. Some move on to trading, some become more inclined towards research, some eventually switch to development. So It's all kinds of people working as quantitative strategists, and it also varies a little bit from bank to bank. But yeah, I mean, this is how the word came up. So yeah,
Okay.
it's a mix of everything.
And so that's the story behind the quant strategist. And if there is someone who is targeting, these roles, and preparing for an interview, what do you think, in a general setup, what kind of, domains should they cover? For example, programming is must, mathematics is must. Apart from that, any other thing that they particularly should stress on?
I think to get hired as a quant, like I mentioned, you do not need a quant degree and you don't even need a finance background. Even if you know nothing
Right.
about finance, you can be hired as a quant. So a lot of these interviews actually depend on what your background is. Um, so if you do typically like quant, any quant interview would start off with a few programming rounds, in which you'll be solving lead code like questions, right?
Right.
Once you clear those, then the remaining rounds are based on what your background is. If you've done a PhD in mathematics, then the remaining four rounds are going to, be things where you will be grilled on linear algebra, dimension reduction, all those kind of things.
Right.
For me, because I had a background in both CS and finance, so I had a few finance interviews in which, they ask simple questions around Greeks, simple volatility models about projects you've done, things like that. Um,
Okay.
so yeah, basically quant interviews, you will have more interviews compared to, tech roles. Tech roles
Right.
generally just have programming rounds, right? Programming and
Right. Right.
DSA. Whereas in quant, you'll have programming, DSA, you'll have rounds on mathematics, especially linear algebra, probability statistics. Then depending on the role you're applying to and what your background is, you might have a few rounds of finance, critical thinking, brain teasers. I know some companies, they actually call people for an on site interview in which they are given a data set and they are required to find signals from the data set. So, yeah, it could really just be anything out of several possibilities.
Okay, so you mentioned about the trading signal part. For example, someone who is preparing for quantum, for example, but there is a clear distinction, or basically not clear, but there is a distinction between the buy side and sell side. There is someone who is interested in this quant trading, so they may enter into the trading signal part, or they may learn the quantitative trading aspect of it. But there are people who are more into the over the counter, pricing,
Mhm.
modeling, and all. So, do you think modeling the signal and all is required for them, or for particularly for these interviews?
No, absolutely not. I mean, like if
Right,
you're talking about, you know, things which look in any interview, you will not be asked questions which are unrelated to the role you're interviewing
right,
for,
exactly, exactly.
whether it's an
Right,
internship or a job. So,
right,
like you mentioned, over the counter trading and all, it's got nothing to, really do with these complex pricing models and all. But I think sometimes, especially if you're applying for entry level roles, companies expect you to have a fundamental understanding of everything. Okay,
right,
if I were to interview today versus if I were to interview 2 years ago, the kind of questions I'll be asked would be different. Today I'm applying to a role because I'm like a subject matter specialist, a subject
right,
matter expert in that role. So I will not be asked those questions. 2 years ago, I will be asked all kinds of questions, right? Because
exactly.
people do not expect you to know anything in depth, but they expect you to have a breadth of knowledge so that you
Right,
never stagnate in the company. And, if you feel that you are hired in a role where you don't see yourself growing, you can always move to a different team. So that's how hiring works.
right. So, having done this question, there is kind of a personal questions that is there regarding your personal view on that topic. For example, machine learning, right? So nowadays, machine learning models, for example, there is an increasing popularity of variational autoencoders or autoencoders being used for volatility surface modeling. and all these stuff. So what do you think is the future of machine learning in this, more pricing, modeling, volatility surface, modeling interest rates and all?
Well, okay, so uh, okay, so the way machine learning, the pace at which machine learning as the pace at which it's evolving in the tech industry and the pace at which it's evolving on the Wall Street are two completely different things. Okay,
Right,
so a lot of buy side firms are investing, especially like the bigger hedge funds, are investing heavily on machine learning
right,
to do volatility surface approximation and things like that. Now, banks or a more traditional finance setup, they would, like I mentioned, it's here the volume and the scale is a lot higher. So
right,
here, if you were to, replace a person with an ML model, it's a different story. It comes with a lot of risk, right? So here things
okay,
move somewhat slowly. But I think over time, because I think recently Goldman Sachs rolled out something for all of the employees to use. It's an AI assistant built on top of GPT. So gradually, and as Goldman rolled it out, other banks also started doing the same thing. So I think that competition among banks is going to somewhat uh, encourage them to speed up adaptability to machine
right,
learning techniques. But buy
right,
side is definitely evolving at a faster rate compared to sell side, because obviously the volume of trade they deal with is lesser. I'm not talking about proprietary trading or market making firms like the fundamental buy side firms. I'm talking about them. So for them, it's more feasible. At banks, the I think the it will be competition driven how fast these things grow.
okay. So having a clear answer to this question about your view on the machine learnings in the industry, I have a question related to your research work, which was the decentralized machine learning. Could you please give an introduction to what decentralized machine learning is and how it differs from the traditional machine learning?
So decentralized machine learning, it's federated learning. When I was that's part of my bachelor's thesis, the project you're talking about. When I was working on it, it wasn't like a very cool thing. It was still like relatively new in the industry. Now a lot of things around federated learning have come out. So um, basically, and it's got nothing to do with quant or finance, anything
Obviously, yeah.
whatsoever. But yeah, to put it in simple words, federated learning is sending the model to the data instead of sending the data to the model. So
Okay.
here the difference between federated learning model and a machine learning model is and like a traditional machine learning model is that a traditional machine learning model would require you to feed data into it, right? In
Right.
federated learning, what we do is that we fragment the model, and our data is lying in different places, different IoT devices, your mobile phone, my mobile phone. We send the model to each of these individual nodes, train it locally, get all these fragmented models together to get the parameters of the main model. That's how it works. And it solves the problem of latency because it's faster. You are like, instead of accumulating data, you are doing computations in parallel. And it also helps in data privacy, because data from your phone and data from my phone will never be combined together, right?
Right.
So it also solves that problem. Yeah, that was about the project. It was coming up with fault mitigation strategy, what comes up with when nodes fail. So how does your model build resiliency against those cases? That's a little bit about what we did in the project.
So that's really a cool thing. I think you have done it in your undergraduate degree, right?
Right.
Okay. And coming on to the current, your current job at Goldman, you have divided, segregated your roles into three sections, as I can see on your LinkedIn profile. So it's basically the prime trading portfolios, the fast pricing engine, and the risk management. So it's like end-to-end chain, don't you think so?
Look, I think most of the projects, you get to work on as a strategist are
Right.
end to end systems, because
Okay.
there's an element of everything here. It's not a pure research project, it's not a pure trading project, it's not a pure development project. Um,
Okay.
so yeah, that's how they are. But I mean, obviously there are teams here, so I've had my set of contribution to, each of these projects.
Okay. And so when we talk about the pricing engine particularly, because that is what I'm more interested in. Like, for obviously there will be proprietary engines, but for someone who is more into the pricing side, what suggestions do you have for them? For example, the traditional models and all, and particularly if there is someone who want to practice more on it, or for example go for projects in this domain pricing area, what kind of projects do you suggest for them?
Well, I think the first how I got started with projects and pricing was Monte Carlo simulations.
Obviously,
So
yeah.
a lot of differential equations aren't solvable, right? It's impossible
Right.
to be solved mathematically. Monte Carlo simulations, and there are variants of that. How you do regularization, how you do variance reduction, all these kind of things. And there are plenty of projects on Monte Carlo simulations related to finance, not related to finance, but fundamentally they teach you the same thing. So
Right.
if you're really interested in pricing, then this is something you need to be excellent at, how
Right.
to simulate and get the price. And
Right.
besides that, yeah, obviously writing simple equations, knowing basics of Brownian motion, stochastic calculus, that also helps.
Exactly. And I think adding to that, for example, if there is a partial differential equations, then solving that using finite difference methods,
Yeah,
in
there
case
are
they want.
several methods of solving them, but even if you don't know how to solve, you can always use Monte Carlo simulations, right?
Exactly.
That is
Exactly.
something which always works, so you should know that.
Obviously, yeah. And just repeating your words, in case if you are doing Monte Carlo engine, there are variance reduction techniques. For example, using antithetic
Yeah.
variables or control variables are there.
Mhm.
So the viewers can use in their project, right?
Yeah, you can
And
learn about all these methods. There's a lot of detailed information on the internet and lots of papers written on Monte Carlo simulations. So, yeah, I think the scope of projects there gets a lot bigger.
there is one term that I hear most of the time, but I don't understand the use. What is prime trading basically, and the use
Uh,
of the word
right.
prime?
So, banks generally have a brokerage business.
Okay.
Okay, yeah, sorry. Yeah, so banks generally have a brokerage business in which, so all these buy side firms, a lot of them have their own trading desk, but over the counter trades, and you know a lot of firms actually have these traditional brokerage accounts with banks, right? Because
Right.
maybe the volume they are trading, or maybe they don't have the infrastructure to trade on their own. So
Right.
prime trading is basically taking the risk of onboarding the capital of these firms and trading on their behalf. So there are two businesses within prime. One is brokerage and the other is financing. In brokerage, it's a simple brokerage business. In financing, it's more so like if a trading firm comes in with their strategy, they're willing to put in $10 million of their capital, and the bank can provide the other $90 million as a
Right.
loan in exchange for collateral or some cash margin in the account. So overall, it becomes $100 million portfolio which can be traded,
Right.
right? So
Okay.
prime trading is analyzing the risk of this business. How much you can really charge the clients, how much transaction fee, management fee, what's the what's the appropriate amount of collateral or margin the clients are required based on how risky their portfolio profiles look. So that's what prime trading is.
Trading risk. So again, we will be using models or statistical techniques to analyze these
Yep.
variables, right?
Right.
Okay.
Obviously, you need models to price portfolios. You need models uh, to get the attribution of. the risk across all the risk factors in the portfolio. These risk factors could come from stocks, style factors, lots of things.
Okay. So I think we had a good discussion on almost everything that a freshers want to know or someone who is in undergraduate degree. At last, do you have any suggestion for someone who is pursuing their undergraduate and want to enter into the quant domain? Uh,
Well, I think nowadays it's a lot easier. Well, even in my time, it was pretty easy to get into quant because if you're an undergrad, you'll obviously join at an entry level, right? So you would
right,
not be required to know any, to know much. Okay.
right,
One or two projects or one or two courses should be good enough to get you shortlisted for an interview. And in
right,
interviews, again, there's nothing high-fi which you're going to be asked. You will need to have a solid understanding of computer science, mathematics, programming, and you should be able to show that you're interested in finance. If
right,
somebody asks you why you're interested in finance, you cannot tell them that, look, I'm interested in Black Scholes, I'm interested in Monte Carlo. You have to tell them that I read about a recent thing, a recent news from the finance industry, and I think, these are my thoughts on it. That's how you
right,
convince a person that you want to work in the industry. So that's another thing you got to work on. Um, some firms, again, depending on the role, might also be interested in knowing how you communicate, whether you have teamwork skills, because sometimes
right.
teams are big, whether you have leadership skills, and yeah, so a little bit on soft skills also you should work on.
So that I think is a comprehensive answer and a comprehensive explanation of everything that we need to know about the quant tools specifically. Thanks a lot for accepting the invitation and guiding the guiding your juniors basically. Thanks a lot again.
Yeah, no worries. It's my pleasure. I hope this helps people around. Yeah.
Okay, and to the viewers, you can drop any question in the comment box, and then we will be, answering them depending upon whether what kind of question it is. Thanks again, everyone.